Hi there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is June 19th, 2023, and I'm here to bring you the market wrap up for the week of June 12th. It ended last Friday on June 16th. So if we take a look here, this was the market action for last week. This is a percent change chart. And so this is based on the close of the previous Friday on June 9th. We can see here that during the week, the Nasdaq 100 index was up a little less than 4%. The S&P was up about a little over 2%, and the bond market and the Russell 2000 were up each about a half a percent. So that was that was basically the rundown from the broad market perspective. In terms of what I'm going to show you here today, here's the game plan. We're going to go into take a look at the major market indexes, and we'll look at them both for the past week as well as the rolling month, as defined by between the last, let's say, about 25 trading days. That's the rolling month. We'll then break this down by the major market sectors, and we will look at the sectors showing both relative strength as well as relative weakness, and to talk about potential ways to exploit potential bullish and bearish trades at either end of that spectrum. And we'll look at them from two time perspectives, both for the last trading week as well as the rolling month. We'll then actually go into the live charts, and we'll highlight some key levels in the S&P and the Qs, and then we'll actually look at then a few symbols of some major stocks. We'll look at the FANG stocks, and of course, FANG is now MANG with Facebook becoming Meta. So we'll look at the FANG stocks, and then we'll throw in Tesla there for good measure as well. So we'll look at a few of those symbols. So anyway, that's the game plan here. Before I go on, obviously the ubiquitous disclaimer. Precision Trading Labs, we are not financial advisors or fiduciaries or broker dealers. We are simply here to help you guys with trading information, trading education, and hopefully to impart some mad trading skills along the way. So that's our deal here. So let's take a look at the market action from last week. So again, this is what went on last week. If we actually go back to the prior week, though, this was actually kind of an interesting thing here, where if we look at this local high here in April of 2022, and we look at this local low here around mid-October of last year, we can see that was a drop of about 24%. So that actually took us down into a technical bear market. Because as we know, a technical bear market, of course, is a drop of at least 20% off of a local high, and similarly, a bull market, of course, is a positive 20% move. So, in looking at this, we actually the prior week that ended on the 9th of June, so the week before the one that I'm talking about here, we actually kind of melted up into a bull market, where we actually took out a 20% move off of this local low. So that was actually kind of considered to be significant. Obviously, this was in the news quite a bit, and in fact, a lot of that was driven by the. When we look at the live charts here, we'll see this in greater depth. But there is this gap that we're looking at here in the daily chart, and in fact, what went on here was that gap that's right there. That was actually the debt ceiling resolution. And so everyone was relieved that Congress didn't kind of send us down the path of defaulting on our debt. So that was kind of the trigger, I think, for that last pop, and that actually coincidentally took us into a bull market. So anyway, so that was the deal for the S&P and the Qs. So this is what went on last week, and then if we actually then start to look at this from the perspective of the major industrial sectors here, we can see last week that transports and tech, those are the big winners here. They were up about 4.5% or so. Energy was certainly in fact, the only one that was actually in the red, although minutely it was down about 0.5%. And then these other sectors here, health, utilities, the financials, and real estate, they were up about 1% or so. And then these other ones were up at least 2%. But again, the transports and the tech, they were the big winners. They're up about 4.5%. And then these other ones were up about 2 to basically 3 or 3.5%. Okay, and again, the S&P was up, a couple of points there. That's where that dot is there. So that gives you the perspective on the rolling week, or I should say the past trading week. And again, that was the percent change, and that was based again off of that June 9th prior Friday close. So that's what you're looking at there. If we then look at this and broaden this out to the rolling month, we can see each one of these dots represents one trading week. Okay, so this is the close on Friday. So this what represented the last five trading weeks. So that was about 24, I think 24 trading days. You had Memorial Day in there, I believe. So that subtracted one. So this is more or less last 24 trading days. And so we could see again from that reference point of the prior close of this 5-week period, which was on May 12th, we can see that tech and consumer discretionaries were actually were the big winners here, or are the big winners for the last 5 weeks. And then on the downside, utilities and consumer staples. This is actually highly significant if you know anything about kind of sector rotation, as well as just sort of having a handle on which sectors tend to do well in various parts of the economic cycle, as well as in market cycles. Usually, if things are really kind of bad and there's a lot of pessimism and you're in a bear market, generally the utilities and the consumer staples are the things that actually excel, because essentially they are far less cyclical. They're less volatile because everybody still needs utilities and toilet paper and then toothpaste and food and all that kind of stuff. So these tend to do well when you're in sort of a pessimistic market. And similarly, consumer discretionary, which are cars and stereo equipment and all kinds of other discretionary stuff, that tends to do less well when there's pessimism. On the other hand, what we're seeing here is that tech, which is the other thing that kind of does very well in a bull market, because of the fact that they are more volatile and they're considered to be more growth stocks than value stocks. This is all kind of, pointing at optimism. Now, having said that, that optimism, of course, could be very misplaced because of the fact that there is, obviously inflation. And inflation has come down, and so everybody's trumpeting that inflation is coming down. But that doesn't mean that. But still, prices are still sky high as compared to a year ago. And so, there is obviously at any point, and if the Fed decides that they're going to start to tighten again, which they've given signals already that they probably will, the rug could get pulled out from this in very short order. But for the moment, things are actually kind of rolling along here, and we've actually had some good movement. And again, since we had moved into that bull market a week ago, we've now tacked on about 2 or 3% off of that. So that's kind of what we're seeing here in this chart here. So again, that's the rolling month from a sector perspective. And so what we tend to like to do is to obviously ride the waves of what is strong here. And so when I show you the live charts here, we trade off of this concept of supply and demand. And I'll show you these zones that get created in these charts that reflect this. But the bottom line is what we're looking for what we look to do is essentially to trade strong stocks in these sectors, and then look for, let's say, smaller time frame pullbacks into these demand zones that I'm about to show you, and then those are the triggers for long trades. Similarly, when you have stocks that are very weak, we will then tend to look for the weak stocks within the weak sectors, and we'll look for temporary lower time frame rallies up into what are referred to as supply zones in order to create bearish trades. And of course, bearish trades can be expressed in any number of ways. One can obviously just buy in terms of a bearish trade, one could obviously short a stock directly, or of course, one can put on any number of bearish positions based on utilizing a bearish option strategy. The most straightforward, of course, simply buying a put, or one could do a bear put vertical spread, and of course, one could also do a bear call vertical credit spread. So those are any number, all different ways of expressing essentially a bearish trade. And of course, one could do the exact reverse up here. So when we find opportunities that are pulling into these demand zones, we of course can buy a call. In addition to buying the stock, of course, we could buy a call, and we could also express a trade by buying a bull call vertical spread, and we could also express the trade in terms of pulling in a credit by executing a bull put vertical spread, and that of course would be for a credit. So those are all different ways of expressing the trade, and of course there are numerous other option strategies that can be employed as well. But those are in a sense the most straightforward and the simplest ones. Okay, so if we now go to the live charts here, and we take a look at where we were. So here's a look at the chart of the SPY. Okay, so here's where we are now. This is our close on the 16th here. Here's what we were looking at actually the prior week. We're looking at here a daily candlestick chart, of course, of the SPY. And so again, this is where we finished last on Friday. This is what we were looking at the prior week. If we notice right here, the prior week, here was that debt ceiling resolution that I was just talking about a couple of minutes ago, and there was that gap here, and then this very bullish candle, this gap, and then this other gap, and then this other very bullish candle here. After that, you can see the market more or less flatlined, and kind of for that whole entire week, just more or less kind of stayed within that range. And then this prior week, the week that just concluded on the 16th, we can see then price kind of marched up here through Thursday, and then there was a bit of a give back on Friday. Okay, but from here up, for the first 4 days of the week, we had a bullish move out of here. Okay, and so this essentially created what's referred to as a demand zone here. And what that is here is that this was an area where after price had moved up here, there was a tight period of consolidation, and then a very, very bearish, energetic move out. And if we blow this up a little here, I can show it to you a little better here. So on the Monday, right here, or I should say on the beginning of the week there, on Monday here, we can see there was a bit of a gap there, and it was an outside gap. There was a very bullish move. So that actually represents a great deal of energy that came out of here. Okay, when that happens, essentially what that means is that you had an agreement between buyers and sellers here, between supply and demand, between bid and asks, in terms of the availability of shares and willing sellers that are willing buyers and willing sellers. And then at some point, there was an exhaustion of sellers here. The sellers essentially backed up the price chart and were no longer willing to sell at this level. So consequently, buyers essentially had to run up the price chart until they found willing sellers. Okay, and that's the evidence to that are these trades that you're actually seeing, because the only reason that these daily candles got formed, okay, was with you ended up, of course, having trades, and those trades happened because, again, institutions and retail traders that wanted to buy, they were no longer able to buy here. They needed to essentially run up the price chart until they found the asks or offers at higher prices. That's what you're looking at here, and this is where the new agreement between buyers and sellers occurred. Okay, so that's the story there. And so when price returns to here, so when price returns to this demand zone that I just pointed out, this is an anticipated area of upward price pressure. This was an area of interest where, again, retail traders and institutions wanted to buy and buy and sell, and they were generally in agreement for about 3.5 points worth in this range. And then when price left in a very bullish fashion, essentially, again, no one was able to buy at this level. So if in fact we end up with a pullback that returns here, there is an expectation, and as I said in the note above here, there's an area of expected future upward price pressure, or excuse me, down here on a demand zone, an area of expected upward price pressure, and that would be an area where we would be looking to buy. Okay, if we back up and we go back in time here, and we find these regions over here, this is a region that it's a supply zone. This is an area where there was a sudden exhaustion of buyers, and price came up here and then turned, and then one can see there was a very dramatic move to the downside here. Again, price was in here for a very short amount of time, and in fact, this actually resolves better in a 2-hour chart. We're looking at the daily here, of course. And so if price returns to this region, we now expect this to be an area of downward price pressure. And this would be an area where one could express a bearish trade. Down here, of course, this in a demand zone, this is where an area where we would express a bullish trade. And so if we look to see where the S&P, the SPY closed here, okay, this is the area where the price where it closed here at around 439.5 the other day. And so if we draw these lines here, we can see that this supply zone above here, this is about 1.5% above current price. And so that's essentially how far the SPY would need to rise in order for us to then take that bearish trade based on this zone here. Okay. On the other hand, if we were waiting for a pullback in order to go long, this would be a pullback of about a little less than 2.5% to this region. Okay, so that's what these percentages represent here. This is where the front line of this demand zone is, and that's the approximate distance from the current price as a percentage of current price. And then similarly above here, this would be the range of how far price would have to go in order to hit these supply zones here. So this is one supply zone here, and then after that, the next major region of clean supply where we would be thinking of selling would probably be up here. Up here, this is an area of resistance. This is, kind of a sloppy triple top here. For those of you familiar with classical technical analysis, this is, like I said, this is kind of a sloppy triple top here. And I think of this as a resistance zone. Price could come back here and fall. More often than not, though, the more often that price returns to a region and essentially then goes back in the same direction, the more likely than not that this area is becoming essentially kind of weaker and weaker. And so essentially where this might have been an area of strong resistance, when this comes back for the third time after this pivot here, okay, this is a test, this is a retest, okay, and when it comes back here again, if it ends up here, which is where that zone is up here, if it's back for a fourth time, it's probably not going to hold. That's our general experience. So it becomes a lower probability trade. Okay, so that's the nature of. So this is essentially that triple top. It's really not a clean supply zone anymore. It's really just it's a matter of it's a region of resistance, but it's essentially a poor area of resistance. So at that point, then, if price actually moves and it actually, let's say it happened to break this supply zone, the next stop is probably going to be up here, and that would be a sizable move up, let's say 6 to 8% above. Now, obviously, a lot can happen in terms of geopolitics, in terms of economic announcements, in terms of the Federal Reserve, all that kind of stuff. So I'm just talking from a pure technical standpoint. There's really nothing here to really cleanly stop price until we get to this region right here, this rally, this base, and then that drop there. And it's possible in a 2-hour chart, this is another region right here. But again, we don't really think a whole lot of this region. Okay, so at any rate, that's the story with the SPY. If we flip over to the Qs, okay, So here we are, and here we are looking at the Qs here. Okay, so right down here, this is an area of demand down here. Now, this is not a clean area of demand because this has already been hit once. Okay, price, this was clearly a drop, a base, and a rally here. And then price returned here. It's quite possible this still may be good. And one of the reasons is that the price didn't really kind of dig in a tremendous amount here. It only penetrated about a third of the way or maybe a quarter of the way through. So this zone might still be good. But you could see that very bullish move out of there. Okay. However, looking at the distance here, this is about 5% down. Okay. On the S&P, it was only down about 2.5%. This is about 5% below. And so, in a sense, what we're going to wait to do is we're going to see what the S&P does. It's quite possible if the S&P falls to its level and starts to bounce, this might actually just start to bounce before it gets to this region. So we really don't, so we'll be looking at both of them simultaneously to see kind of which one carries the day. But again, this demand zone down here is about 5%. And then right here, there's a 2-hour zone. That's about 2% below this one. Okay. And then right down here, this is a long way down. That's about 11%. So these are the regions that we're looking at for the broad indexes. If we now turn to some of those stocks that I had mentioned earlier here, here's a look at Apple. Okay. Within here, there is an area here of in a 2-hour chart that we would be looking to buy here. This resolves in a 2-hour chart. A lot of people, I'm sure, would be looking to buy here because of the fact that this kind of price kept getting rejected out of here. But again, this was an area of kind of, some people might think of this as, it's kind of sloppy support. But it's quite likely when price gets back here, it's not going to, we don't think it's going to hold. And so really, this would be the region that we actually think that we would actually get a bounce, because we had a bullish candle there. Notice down that there's a big gap after that. So this is the origin of this very strong move. So this is a place that we would expect to actually want to buy right here. So that's about 5%, a little less than 5% down. After that, we kind of have this area here, and this is just kind of a consolidation mess here. We don't really think that much would hold here. And then at that point, then we're looking here, and this is kind of that similar region that's about 10% down on Apple. So, and that was kind of very similar to what we were looking at on one of the equity indexes there. So we'll see what happens with that. So that's the story with Apple. If we look at Amazon, here's where we closed that last Friday. So really, right now, it's actually sitting. In fact, if we go back, let's pull this back a little here. Okay, so right here is a drop, a base, and a drop. Okay, ever since then, price came back into this right at the end of this. Came back in at the end of last week. Okay, and this is what we were looking at the end of the prior week. Notice this entire week that just passed, it's just been kind of sitting right at the bottom of this level. Okay, but that resistance essentially was created right here. And that was the thing that we highlighted in last week's session. Okay, so right here, price could still fall from here. If it does, then a region that we would want to buy is about 6% below here, almost close to 7%. Okay, and that would be on Amazon, going from about 125. We would need for this to fall a little less than about 8 points here. Okay, but this would be an area where we would want to buy at that point. On the other hand, like I said, it could fall from here. Frankly, the longer this holds here, more often than not, the longer this holds here, the more likely this is ultimately to break, because essentially the supply is just getting chewed up here. And it's frankly almost, it's somewhat surprising that it hasn't broken at this point yet. But again, the longer this goes on, the more likely this is going to be to break. Okay, so at any rate, that's where it's sitting. So this is sitting right at the doorstep here. And then right below, we can see there's some other regions. Of course, these are much further down. All right, so that's Amazon. If we look at Google, right here on Google, here's where we closed. Okay, the next clean area of supply is about 10% above here. And this is actually kind of similar to what we were just looking at on Amazon. Okay, if we go back here, again, here's that same, you're looking this looks very familiar, I'm sure, if you just think about what the Amazon chart looked like a minute ago. This is essentially the same zone there, except for instead of Amazon, it's Google. And again, this is basically behaving in the same exact manner. Price came up to it. It's kind of knocking on the door a little bit here. Um, the only difference here is that where on Amazon, this was actually going on all within the zone. This kind of got rejected from the zone, and now it's been hanging out below. So it's quite possible when price returns here, this still might represent resistance here, and there still might be some supply that hasn't been chewed up here. So this could, in a sense, get smacked down from here. But again, the longer it goes on, probably the less likely it's going to be to work. But again, like I said, it's very similar to Google, excuse me, to Amazon, but it's a little different. And so in a sense, it's not identical, but as some people say, the charts are not identical, but they rhyme. So that's the story with Google. Below here, there's a demand zone in the 2-hour chart, about 3% down at around 121. And then there's there's a daily demand zone here at around 117, and that's about 5% down. So essentially, these are kind of the ranges that we're kind of looking to buy and sell. So again, we're not necessarily looking to trade a breakout here, but we're waiting for the price to come to us. And this is where it comes to us on the upside in terms of expressing a short trade, and this is where it comes to us on the if it pulls back in order to express a bullish trade. So that's the story with Google. If we go to Facebook, Meta here, this is actually kind of interesting because and we've been looking at this for the last several weeks here. If we go back in time, let's just go back here to here, February in 22. So this is last year. So this is about about 14 months ago now. Notice this huge gap that got created on presumably a very poor earnings announcement. Okay, and notice that Meta dropped from about 320 down to, what is that, about 240. Okay, so that's about a 20% drop from here to here. Okay, well, as we know, gaps, in a sense, ultimately, they try to get filled. Okay, so what has happened here now is that it's taken a while. Okay, but basically back in at the end of May into the beginning of June, it now has started to actually try to fill this gap. So this is the same region. What I did was I just transferred this over to the right side of the chart here. And so this is that same gap area that we were looking. And what I did was I just outlined the boundaries of it. Okay, this is the top of that gap where the price had fallen over the earnings announcement, and then this is where it actually fell to. Okay, if we look at that, we can kind of see here that price is now starting to try to fill that gap here. So right now, if we look at the range here, what I did on this gap here is that I broke this into basically quarters. Okay, so this is the lower 25% of it. That's the halfway point. That's the top quarter of it. Excuse me, the second quarter from the top, and then this is obviously the upper quarter of this gap. So we can see we've now filled about 1/4 of this gap. Having said that, there's still 3/4 of the gap remaining. So if the market holds together and particularly the Nasdaq shows some life, needless to say, Facebook, Meta is going to go right along with it. And then this has actually a fair amount of room in order to move before it essentially encounters any formal resistance. Okay, so this is actually a great opportunity, both in terms of whether there's a pullback here or if somebody's playing sort of a well thought out breakout. This is an area where you could actually see some movement to the upside here, because again, there's no formal resistance here because this is an entire huge gap area. Okay, and again, we've only filled about 1/4 of the gap to date, so we've got 3/4 of it left over. Okay, on the other hand, if this thing does start to pull back, right here, this is probably an area where we could buy. And that's about 9% down, so that's actually kind of a ways down. And then also right in here, this is an area over here, and I didn't mark it out here. But if we actually look here, this is about 4% down. Okay, and I would be looking, perhaps, particularly if I look at a 2-hour chart, probably this area right in here. that's probably an area, probably there's a rally, a base, and a rally there. If we're just going to stretch that out, we can certainly see that in the daily chart, and we could probably just use the daily chart for that. Okay, so this is what that demand zone right there would look like. Okay, and so in fact, if we're looking for a pullback, then in fact this would be, we would then in fact the front door of this demand zone is really going to be more like there. And so if we look there, that's only about 2%, about 3% down. Okay, so this would be an area where we could potentially express a bullish trade on Facebook, on Meta. Okay, so that's the story with that. Last couple, we'll take a look at Netflix here, and excuse me, look at Netflix right here. Okay, so here is where here's where we are now, right below here in the 2-hour chart, about 1.5% down. There's an area of demand here. There's a rally, a base. Notice a gap, and then a couple of very, very bullish candles here. Okay, this is an area of anticipated upward price pressure if in fact if in fact this pullback continues into this area of demand. And that's only about 1.5% down. After that, if it does fall, though, there's really a great deal of distance because there's nothing clean to trade until it gets to about here. And again, if we put this into the 2-hour chart, we would see a clear reversal. And we refer to this as a demand zone. And again, this reversal is referred to as a drop, a base, and a rally there. Okay, so this would be an area. So really, essentially, this becomes an area of buying pressure here. After that, we don't really think there's anything worth in terms of buying here. And of course, you might think about that and go, well, if it breaks here, you might just see a breakdown to this level here. And of course, you'd be right. So at that point, then we would actually be looking to perhaps express a well thought out breakout trade to the downside from here. So that's the story there. All right, and then after that, but truly the next clean area of demand in the daily chart is actually sitting way down here. But that's about 15% down. Okay, so at any rate, there you go. There's Netflix. So anyway, I hope you found this all interesting and helpful. If you did, what we'd like you to do is to first of all go to our YouTube page, give us a like there, subscribe to our page. Also, if you look on the YouTube description, you will see a link where you can actually schedule a call, and I would be delighted to speak with you, give you a little bit more information about Precision Trading Labs, talk to you about that whole supply and demand concept, also look at some symbols of interest that you might have, and also talk to you about a route to becoming a confident trader. In addition, we're also actually starting up a new program soon where we're actually we'll actually show you a method of how you can potentially earn a funded account to trade futures. And so we'll be happy to talk to you about that as well. So anyway, that's the story. So again, this is Mitch Firestone. Thank you very much for the privilege of your time, and I will see you next time.